So this is the pension series in which I will cover around 8 major topics. So under each category, I have analyzed or I have considered a couple of points. Like under the pension basics, there are types of pension, what is auto enrollment, what is difference between state pension and private pension, pension allowance, how much should I save into pension, types of tax savings. And under employee contribution, I have included the major things are salary sacrifice and private pension. And under self-employed, I consider benefits of pension, contribution as a self-employed, then tax implication of pension, how much you should save. And so under pension contribution through company, we will cover two major things. One, I will answer your question, how much you contribute into your employee's pension pot. The second, I will cover tax benefit of pension contribution with practical demonstration and so on. For each video, I will reveal at the start of like what that video will include, and then at the end what we have covered. So this way you can understand what we have covered so far. There is an old fable about cricket and an aunt. The aunt worked hard all summer gathering food for the coming winters, but cricket spent all his time relaxing, singing and laughing at aunt for working hard all the time. Well, winter did come around eventually. While aunt have enough food to tide up until next summer, at the same time cricket ended up with nothing. As human beings, we are wild to prefer instant gratification over long-term goals. Why set a money aside to spend 2 decades down the line when you could spend it on stuff that will make you happy today, right? In my previous 2 videos, including tax planning for limited company and tax planning for sole traders, pension contribution plays a vital role while explaining and planning a tax for limited company as well as for sole traders. However, before dive in, I would recommend you to watch my previous 3 videos on pension basics, pension for employees and pension for sole traders, because a lot of topics I have already covered in my previous 3 videos, which will definitely help you to understand this video in more detail. So in limited company, directors contribute into their pension pot. Contribution through company is an allowable expense which reduces taxable profit and ultimately corporation tax. Just because pension contribution attracts a tax benefit, directors often ask, how much can we contribute into our employees' pension scheme? Well, you can contribute into your employees' pension scheme as much as you can, subject to HMRC annual pension allowance, which I already explained in my previous video, pension basics, for which you will find a link up there. Your contribution will be tax-free as long as it does not exceed annual pension allowance, which currently capped at £60,000 for 23-24 tax year. Secondly, the pension you are contributing must not exceed your company's income for that year, as this could raise a question for HMRC whether the income has come from companies trading. Now let's have a look at tax benefits of pension contribution through company. The amount the company directly contribute into your pension pot will be an allowable expense for tax purposes, provided there is no non-trade purpose for the payment, and of course it will reduce your company's corporation tax bill. The key thing to bear in mind is that you cannot contribute into your pension pot more than your annual profits or £60,000 of annual allowance, whichever is lower. If your profits are 30,000, then the maximum amount you can contribute is £22,500, and government will top up this amount by 25%, which will ultimately becomes a £30,000 in your pension pot for that year. And if your profits are £70,000, then you can only contribute up to the maximum of £60,000 into your pension pot for that year because of annual pension allowance of £60,000 for 23-24 tax year. And finally, one of the biggest benefit of pension contribution through your company is your company does not have to file P11D and does not have to pay national insurance tax on your benefit, because pension contribution through your company is an exempt benefit. On the other hand, you as a director of the company don't have to declare this pension on your personal tax return and don't have to pay any tax or income tax on your benefit in kind for this pension, because as already discussed, this is an exempt benefit. Let's assume you have contributed £10,000 into your pension pot through your company. This is how your P11D will look like. On your screen, you can see £10,000 is total benefit of pension, on which national insurance charge at 13.8% and company must pay £1,380 in national insurance. Now, this benefit you also must declare on your personal tax return. The tax liability will look like, on your screen you can see your annual salary is £50,000, on which you had already paid PAYE of £7,484 during the year. Other than this, your total pension benefit is £10,000. So at the bottom, if you see, your total income tax liability is £3,948. This is your additional tax liability which you must pay on your pension benefit in kind. So you must be thankful to government for not including this into your pension benefit, and thank me by posting a comment please. Now let's have a look on corporation tax savings through pension contribution. Let's say your profits are £60,000. This is how your corporation tax liability looks like if you don't contribute into your pension pot. Profit chargeable to corporation tax is £60,000, and then at the bottom, if you see, self-assessment of tax payable is £11,972.76. Now let's say you have contributed £10,000 into your pension pot. Let's have a look how your tax liability looks like after pension contribution. Your profit chargeable to corporation tax is £50,000, and at the bottom, if you see, corporation tax payable is £9,507.71. So essentially, with pension contribution, you have saved corporation tax of £2,465.05. Not only tax, but obviously you have contributed £10,000 into your pension pot to secure your future, which obviously is a tax-free money for you. So overall, in this video, we cover how much you can contribute into your pension pot through your company, which essentially is annual pension allowance, tax benefit of pension contribution, and finally, corporation tax planning through pension contribution. Guys, please do not forget to like and comment. Obviously, it really helps YouTube algorithm. And if you have any questions, any query, anything you want to share, any thoughts, any positive feedback, any negative and constructive feedback, I would appreciate that. As always, hand ahead, salute. Until the next video.